So I'm Kevin Bullock, CEO of Signal Gold. Happy to be here and good to see you again, Matt. I'd like to update people on our Goldboro story out of Nova Scotia, which is a development project.
Brilliant. Well, Kevin, that's why we're on the call, right? We've seen a few quite nice headlines coming out. Environmental assessment approval for Goldboro. You're hiring people to kind of move this thing forward and advance it. I'm intrigued as to how one goes about doing it. I think there's a sort of dawning reality out there that marginal projects are, getting found out, and I think teams that have been there and done it before need to kind of help us understand how it gets done. So if you're okay, I might park up the other two projects for today and just focus on Goldboro. You good for that?
Absolutely, yeah.
Okay, so let's remind people what it is. First of all, go for it.
So Goldboro is a project located in northeast Nova Scotia. This is a project where we have 3.1 million ounces of resource and 1.1 million ounces of reserve. So in other words, a feasibility has been done with very robust economics, showing a high NPV after tax of $330 million value. An IRR of 25%, great recoveries, clean metallurgy in a first world. And I'd like to just touch on what you mentioned before. I mean, people do things, trying to advance things in different ways, and there isn't really a book of how to do it. But what we choose to do is bring in people who have done it before. I think it's very, very important to have done something before when you're trying to build something for the first time, specifically in this environment. So I've been involved in over 7 development projects around the world in various places over my career. And others in the team have also done so. So we do have a track record of success in getting mines to through development into the producing stage. And we are smart enough, I think, to hire the right people who will spend all their time on this. And to that point, we've hired a project director that has a fantastic career and history of bringing projects online, on budget, on time, named Brian Jackson, who is now building up his own owner's team for us for this project to move forward. And we'll be hiring about 26 people on the owner's team. And it's very important. 2 things that we promote here to get things done right. One is come up with the right plan and be prepared, because changing once you've started, it's like building a house. You want to change the design after you've started the foundation. It's going to cost you 10 times more. So being prepared with the proper plan and then executing on that plan. Those are the 2 things, a proper plan and execution of that plan. And Brian is going to build a team that'll do that fantastically.
Okay, so people who've been there, done it, and got the T-shirt, plan and execution, I get it. But from the feasibility study, what we're seeing elsewhere in lots of conversations that we're having, people coming to this stage and just having to say, do you know what? 1, the market's not excited by the numbers we just gave them. And 2, I'm nervous about these costs. I hope that they come back down, so I'm not going to do too much more. Your attitude is what?
Well, to be honest, yes, there is inflationary measures. However, the way to make them less prominent is to the types of contracts that you design, your contract strategy, timing. We've been through, or I've been through a 35-year career whereby prices of the commodity go up. You go raise the money to build something and build it. By the time it's built and producing, the commodity price is down. It's always better to do it the other way around, as everybody knows, but more difficult. So fortunately for us, having the right people, having the project in the right jurisdiction, and having the highest grade undeveloped open pit mine on the East Coast, that all adds up to maybe people aren't excited on the market right now. However, they should be excited about this deposit. So with the contract strategy, it's what one of the things we're doing on the process plant, which is a third of the capex, is coming up with a guaranteed maximum price contract negotiated. Whereby there can't be overruns, and if there are, they're not to our cost. Also, we're contract mining, so the actual capital cost for equipment and all that kind of stuff has gone up. Tires, rubber, steel, all that kind of stuff, but we're not buying anything. So we'll take a little bit of a hit on the operating side because of that, of contractor rates have gone up, but not on the CapEx side. So really, if you've got the process plant guaranteed maximum price, the facilities, the employee facilities will be such that they're rented and leased, and therefore they won't be a big expense that can be an overrun. So really, it's down to the tailings facility, and that's the one that we need to do our work on to see how much more that will cost from our feasibility to now. The other thing I just want to point out, Matt, is that some people build on a feasibility that's 2 or 3 years old, and of course there's going to be a bigger change than one that's current. So we're also going to choose to update our costs and our reserve prior to board approval and board sanction. We have drilled off some inferred resources that fell into the measured and indicated pit incidentally. We've infilled them. It's about 60,000 ounces that's currently considered waste. So if that's converted at our conversion rate of 75%, that could be 45,000 ounces of what's currently considered waste that will be ore, which is about $100 million of gold. So, if the costs increase, there's also a revenue increase on the revenue side with the infill drilling that we did within the current pit that's there now without changing the pit design.
Right. Okay. So well, I guess managing the efficiencies at both ends of the scale there. So I just want to come back to the numbers. Okay, you talked about NPV5 of 328 million and IRR just over 25%. That's done at what price gold?
That's at $1,600 gold. Actually, $2,200,
right.
$2,000 Canadian.
Right.
Currently, gold is trading at $2,250 or something like that. So it's at about a little over 10% discount to today's price.
Right, and you've got to have a view on that, and I guess your funders will too. Gold heavily depressed the last over a year. I was going to say 12, 18 months has been on a ride down. How does that affect your decision making here? Because there's at some point you're going to have to go to market or think about how you go to market, who you go to market to, the type of money that you want on, and perhaps maybe even tweaking the project further. I mean, does it make you nervous?
No, because everybody's going to stress test this at lower gold prices on the financing side, and we've done the same. We show our sensitivities, and one of the things about having such a robust project is that this thing works at $1,300 gold. So when you stress test, a lot of people like to say what this will look like at $2,000 US gold, but what people should be focusing on is, does it still work at lower gold prices, and then move forward based on that.
Right. Okay.
So I'm not worried about I'm not worried about that at all. This project is very high grade and works at various gold prices that I can see in the foreseeable future. It's a 10-year plus program. Gold prices are not going to remain the same price through those 10 years. They're going to be up and down, and it has to work in all cases.
Right. Okay. So we're talking about 100,000 ounce a year producer over 11 years life of mine, on average, right? So what do you say to retail investors might be a little bit nervous about the timing of the financing, the cost of the financing? Do you say it all comes out in the wash, or is that a little bit of a difficult conversation to have right now?
Well, it obviously is a difficult conversation to have right now for anybody. However, because of where we're located, the grade of the deposit, the simpleness of the metallurgy, and the jurisdiction, we are able to max out on a debt equity ratio here quite high. So, not that we want to do that, and not that we will do that. It depends when we get financing packages together, what our share price is doing and what the market's doing, because that's a while from now still. But it is we will weight heavily on the debt side if the market is not there on the equity side. So it really is about putting the right package together, and that's why we've hired a financial advisor called Auramet to help us with that and look at all possibilities for financing this project and see what's best for all stakeholders.
Right. So no decisions yet in terms of alternative financing, whether that include royalties or streaming. So when will you be in a position to sort of advise us to what that could look like? Yeah,
that'll be second quarter next year that we'll have a good understanding of what we're leaning towards.
Right.
So in the permitting process for this, as you said, we've received our permit for EARD, Environmental Assessment Registration Document, was approved, which is the first approval in years in Nova Scotia. A huge step for the company, a huge step for us, and a tick on the box of a hurdle that people thought would be hard to jump, and we're through that now. So the rest of the permitting, though, because there's a DFO process here for offsetting fisheries, it's still going to take another 12 months. We believe that we'll get our permits around the end of next year, all of the other permits. And that means our construction plan is to start construction in March. So the very end of first quarter of not next year, but the year after. So we have time. We have time for costs to settle, the market to come back, time to really look at all financing opportunities and pick what's best for the project.
Right. Okay. And what are the other long poles in the tent, so to speak? Additional permitting on the fisheries. What else?
Detailed engineering that has to be done, recosting, redoing the reserve. But there aren't any red flags in the process now that we've got the EARD. So this is a process we have to go through. It takes time. There is some offsetting that we have to do. Any disturbed wetlands that we disturb, we have to offset at basically 4 times, which is great. We want to do as much as we can in the community and the area, and if possible with the Mi'kmaq, which is the indigenous population in Nova Scotia.
So what does offset mean by 4 times?
So if you're disturbing a wetland area that you can't otherwise do anything else, like the deposit can't be moved, it is where it is. And if you're disturbing wetland there, you have to do a program to improve wetland somewhere else. But 4 times.
Okay. But 4 times the amount. Okay.
Yeah, and financially pay for that too. So I think that's a great program. I think the mining industry gets a bad rap about its environmental footprints and everything. And this is a way that this actually is the other way around. We're actually going to make things better, and everybody has to. So it's a good program.
And is there obviously you'll remediate the land after you've finished mining it?
Yeah, it's in addition to that. Yeah.
Right, and what is there a bond against that you've got to pay?
Yeah, everybody I believe in every province in Canada has to close the mine financially before they open it.
Got it.
So a bonded, properly received closure plan.
Right. Okay. So it seems to me you've kind of got the right people on board, and you're kind of building this owners team of people who've been there and done it before. That's all good news. So a few hurdles to go, but you're looking to be. Do you say in production by Q1 2024 or start build?
That is the shovel ready start of construction.
Brilliant. Okay, fine.
So there's still a year of permitting to do, and then some final detailed engineering and long lead items, and board sanction, and then we go as of our schedule we have today is March.
Okay, so that's a moment in time. The other moment in time is when first pour. So what's the build period on a simple project like this?
It's about 20 months.
Right. Okay. So we're getting a sense. So we could be at 24. So end of 26, you could be first pour. Is that what you're aiming for?
No. Yeah. Mid 26.
Mid 26. Okay. Cool. I was just trying to work out what the moments are, because companies get re-rates at different moments, and obviously I'm just trying to plan those out in my mind.
One of them generally is when you get EARD approval, but the market, when we got ours, which was not long ago, the market was simply on holiday, and that's a compressed spring right now in my mind, and as we start moving through the other permits, which are easier than EARD, people will start get the understanding that this will be the next mine built in Nova Scotia.
Well, it's fascinating actually, because the whole conversation around what does Tier 1 jurisdiction mean anymore, given that environmental permits and licenses are so hard to get anywhere in the world at the moment, it seems. Was it particularly onerous for you, or was it sort of a known process when therefore there was an expectation that it would happen?
We expected it to happen. It's difficult, like you say, it's difficult everywhere, but we took the stance that we would put forth the most robust EARD document that the government has ever seen in Nova Scotia. And their comment was it's the most robust one they've ever seen, and that everything was covered and it was approved first pass. We were expecting at least 1 or 2 requests for further information. but it was approved with conditions. So it is something that was very well done, and I congratulate our team on that. They did a very good job on the environmental side, and our ongoing communications with the local Mi'kmaq is included, has to be part of that process. So it looks like we've got a stamp of approval from the community, the Mi'kmaq, and the government. So it's just now moving to the next steps of industrial approval.
It's kind of interesting, actually. We did a kind of two-day conference earlier in the year. It was copper, not gold, but it was copper. And there were the 10 development projects on hold, which, if in production, could produce the same amount of copper that's being produced today. And the environmental component is just so tough these days. There seems to be a real sort of spotlight on it, and I think people are sort of nervous about signing stuff over, which may cause problems. And we've seen it in gold too in South America. So yeah, no, I hear what you're saying.
Well, look, man, I mean, look, it is tough, and it should be tough. So just do the work. Cutting corners takes longer.
Right. Okay. Right. Let's talk about the future, okay? Because what I'm mentioning is, look, 11 years life of mine is good. It gets over that 10-year, threshold that bankers have in their heads. Life of mine. It's big. It's 100,000 ounces average, so that's good. Another thing that we have in our brains when we're trying to work out what we invest in. But can it be bigger? Can it be bigger? And what are you doing about it? And is now the time to answer that question?
Yeah, so we actually did a preliminary economic assessment prior to our feasibility. And in feasibilities, you can only use measured and indicated reserves, whereas in a PEA, you can use indicated. So as I said earlier in this call, we have about 3 million ounces of resource, of which 1.1 million is open pittable reserve. The rest of it is underground mineable. So in our PEA, this is a screenshot from it showing the underground potential. We've only drilled 550 meters deep, and these analogs of these go for several kilometers. So there is going to be a phase 2 feasibility once we've started open pit mining to then incorporate an underground as well, which is, remind you, is much higher grade. So there will be a blend of open pit and underground after about year 8, and that'll extend the mine life. But what we're most excited about is west of the current 3 million ounces. On this particular slide, you can see the 2 open pits that straddle the south end of Goldbrook Lake. That's the 3 million ounces down to 500 meters deep. The hot colors are the geophysical signature running west of that. And the green squares are previous late 1800s, early 1900s shafts mining the same system. And there isn't a drill hole from the west end of our current resource all the way to the past producing mine called Dolliver Mountain. That is exactly the same strike length as the current 3 million ounces. So it's not arm waving to say this could double just on surface, and never mind the underground. So there's a huge upside to this story. We've only drilled down to 500 meters on half of our property.
Right.
So
okay.
Where is it best to look for gold is next to a large deposit or in the shadow of a head frame. And we've got both here with a geophysical signature.
Okay. So there's a couple of things going on there, which around timing and cash flows, etc. Which is I'm going to go back to the beginning of the conversation. You talk about the underground and potentially you're talking about year 8 there. Is that because it's technically constrained and you can't go underground until then, or is that a cash consideration?
It's both. We would prefer to go underground using cash flow and not do a secondary financing. And second, we would prefer to take the ramps down from within the pits for a whole bunch of issues, including environment, noise, light, sound, dust, down within the pits. So what this allows us to do with that strategy is to drill off the inferred to a measured and indicated stage underground using cash flow from the open pits, and then designing a second feasibility to go underground and then developing out of cash flow. All along drilling west of this deposit on surface from starting this fall.
Right. And so let's move to that bit. So moving west is on strike, as it were. Again, why separate that out? Why is it a case of you just want to kind of get going, get cash flowing, and then build all of the sort of blue sky component, the future of this out of cash flow? Is that what you're trying to do?
Yeah, there's a number of reasons, Matt, and I won't get too detailed here, but the eastern part of our property was Crown land and much easier to get drill permits to start with, and west is private land, which we are currently purchasing. And we're waiting till we own it all, and then we can get going on that. But as soon as we saw that we had over 10 years mine life, that's a feasibility on its own. And then to create cash flow and grow this thing. If we were a very large company with significant deposits everywhere else and had the cash flow and everything, we would probably start the underground and or probably even wait and drill it all off and start a combined open pit and underground, and it could be very large, but it would be years from now. We prefer to get going and use the cash flow to build a company.
Right. Okay. Makes sense. And so I said we wouldn't talk about the other assets, but all going according to plan, throwing off cash, expanding, continuing to extend life of mine, the short life of mine that it has.
Yeah, I mean, look, we have our project in Point Roos, which is a small 15 to 20,000 ounce a year producer. It has been for 10 years and continues to be. That's not the future for us. This is the future for us. So it continues to be more difficult to find more ore in the area, and there's really not much in the type of deposits that we currently find that would allow for expansion. So it really is something that we looked at 3 years ago and said there's no real growth strategy right here in our area. There is on the peninsula probably with a roll-up or something like that. But we want to focus on this, what I consider one of the best, if not the best deposit that I've ever been involved with.
Okay. And in terms of people looking in, like the markets just are quiet at the moment, but it doesn't mean that people aren't looking and conversations aren't happening. I know you're off to a conference soon in Switzerland, but are you finding the narrative out there okay? People are talking, but just not doing?
Definitely, and I think we'll see. I think what I'm starting to notice is a lot more talk about M&A because of the market right now. I mean, you've got to adjust based on the market that you're in. You can't just throw your arms up and quit. So it's about moving things forward, thinking outside of the box, getting the right people involved, getting people to understand what your project really is. And this is a multi-decade mine that's going to make a lot of money for people involved, and people know that. People are seeing it. Nobody's acting on the market right now, but they will. They call them cycles for a reason, and this will be. We may even have a great perfect storm here where we get rollover in costs and an increase in gold price by the time we build this. Hopefully not the opposite, but you can't have the inflationary measures that you have right now. And gold price continuing to go down for indefinitely, because then all the mines will just close. So, it's got to change at some point. And I think we're, I'm a gold bug, so I'm going to say it is going to next year.
And how are you feeling about this? Because this environment also creates opportunities in the sense there's a lot of kind of cash-strapped companies, a lot of, as I say, perhaps stranded for one reason or another, let's call it. And there are some very marginal projects with some very average teams potentially. How do you want to focus on this and when you get cash flowing, I understand it, but at some point you're going to get those bankers phoning you and saying, how about it? What's your appetite or ambition? So
we're very focused on our plan we put together 3 years ago, which was three-pronged. One was to produce cash flow to move Goldboro forward. 2 was to develop Goldboro, and 3 was M&A. And we've always wanted to add M&A to our growth strategy, because the first step is to get to the 150,000 ounces a year, and then the second is to get to 250. And then we don't really want to go much larger than that. We want to just start in putting a dividend in and being a very, very efficient gold mid-tier.
Okay. Kevin.
So that's the long story for that.
Well, it works for me. Kevin, I appreciate the update on Goldboro. Things seem to be moving at a nice pace. And in this world where there seems to be a new dawning reality of what, it ain't that easy. Mining's tough, but you seem to be chugging along. So appreciate the update and stay in touch, okay?
Thanks, Matt.